Hello, everybody. I hope you're enjoying your long weekend. Starting it off with the S&P 500, stocks rallied very nicely on Friday. Thursday, there was a very bullish intraday reversal off the lows in all of the indexes. It was very rounded out, had a much different look than anything I've seen during the downtrend and bounce attempts of 2016. The S&P 500 and Russell 2000 both took out their lows. Russell 2000 both took out their lows on Thursday. And then after that intraday reversal continued the bounce. The NASDAQ and NASDAQ 100 put in their lows earlier. Did we hit new lows on those indexes? 42.12. Yeah, we did. So all the indexes hit new lows. So this is technically day two of a rally attempt, or day one, depending on what index you're using overall. Russell 2000, technically it's day one. But to me, it's kind of a day two overall, with the indexes hitting new intraday lows on Thursday, rounding out off the intraday lows, and then rallying basically into the close, and then having Friday's move. But it's not perfect yet. We're not out of the woods yet. It's just that this is a better looking bounce attempt than we've seen yet. And the VIX, this is really weird because the VIX here is different than the VIX on some other charts that I see. But the VIX, you can see it's about near where we were in January, but still nowhere near on August. I've seen other VIX charts where it looks like the highs are different. I don't know if this is the old data or new data. I need to look that up again. But basically, since this is the VIX chart that I use personally, I can tell you that I don't see enough fear for this to be the bottom. But there's enough fear in the AAII survey with bulls coming in under 20% for the second time in 5 weeks. I think the only other time that happened was in the 2009 lows. And then also, this has only happened like 6 times in 20, or 8 times in 20 years. Or 6 times in 20 years, I think, actually. And the 8-week moving average is lower than what we were in March 2003, March 2009 on the AAII Bull survey. So that's interesting. But the VIX is really the one I pay attention to. And since it's not hitting new highs, I'm not completely confident that we've seen the ultimate lows yet. But it's a good bounce attempt. And with that, we do have a new long this weekend. But we also have some other decent-looking stock charts out there. Sorry, guys, I just like smaller price charts. FN is one of very big interest to me as it's consolidating. Volume isn't exactly below average, but max green bot. If it can go a few, preferably over a week more sideways, I'll start to be looking for a long position, but a breakout here would be too early. It's just a good start. I liked how Skechers retook its 50-day moving average after its move on Thursday, so that's kind of a little bullish pattern. CCF, one that kind of bucked the overall market in 2016, is starting to handle out. It actually does have lower volume, so it will be on buy stop watch pretty soon. I would like to set buy stops on that one. And SPKE, another utility stock. This one looks very bullish, but I don't know if I want to buy it here. I kind of want to see another week of sideways price action, and then maybe think about going long that name. And then, of course, OCLR, the one that shook us out a couple times by just pennies, is resetting up. But once again, the handle's too high. I'm going to need to see it go sideways for a few more weeks. But this is a really, really, really good-looking chart. Now, the one new long position is a doozy. It's a good one. JBSS. The only problem here, I don't like how we got today's on there. Let's just do this one. Okay. Let's now do JBSS. So, perfect pocket pivot point signal move. If this handle was a few weeks longer, so that 50 and 200-day moving average was closer to the price, this would be a perfect move. But if we look at this arithmetic chart, at the 10 and 20-day moving average, and we scale out, we can see that it's trading in a more choppy pattern compared to what it used to trade leading up into this 2013, 2014. So this is already a bigger pattern, which means with a cup of this size, you're going to want to see probably a handle at least a quarter of the size, which means that for this to be a really strong, solid, high reward, very low risk trade, we would need to see another week or two of sideways price action before I would say that this is a great, perfect move. That being said, this is a pocket pivot point signal on very strong volume, with a small surge in BOP, in a market that's turning higher. If you look at the relative strength line, this thick white line, is hitting new highs ahead of price. It's very bullish. And, I would hate to not go long this stock and see it race to 85 to 100 based on a measured move of the August lows or the August open here. So I'm going to go ahead and take a position, and I'm not going to take a small position. I'm going to First off, 2% of my account capital is going into this one because it's CanSlim quality. Earnings are out of the way. It was an earnings winner back here in January. 2% of my account capital is going into it because it's in my pre-perfect speculator scan. Right now, no active stocks qualify for the perfect speculator scan, but BMA and JBSS still qualify for the pre-perfect speculator scan. Those are the only two, and one of them is giving me a buy signal. Got to take it. And then it was also obviously confirmed in my price volume BOP surge scan. So 2, 2, and then 1, total of a 5% position. But I'm going to risk a lot before I know I'm totally wrong on this trade idea. You can use either the 58.67 low, the 60.28 low, 60.74 low, or 62.25. What I'm going to do, my first sell stop will be with the move below 62.25. I'll be out 33% of the position there. If it then closes or moves, below 60.28, I'll be out of another 33%. And then if it moves below 58.67, I'll be out of all of it. That'll lower my overall risk in the trade with this pattern. Because with this pattern, you're going to want to see this blast off higher immediately or go exactly sideways. If it starts to reverse back into the base, it's possible it's going to produce a major reversal move. I doubt it. This is a food and beverage stock. Remember, our top two holdings right now, AGRO and ANFI, are both food and beverage stocks. HRL hitting new highs, DF hitting new highs. So JBSS appears that it's right behind wanting to hit new highs. And with it being perfect speculator and CanSlim in this market with a decent bounce attempt, I think I'm going to need to at least try to push it just in case it does break out immediately. If not, I start cutting my losses, and it's a trade I'll take over and over and over. Now, an extremely bullish tape, extremely bullish, where the reversal on Thursday came on huge volume. We closed near the highs, and then we had today's move on an even bigger volume. And then JBSS was, let's say, breaking out of this pattern right here, but the base was a little longer. I would say this would be a 20% long signal if the handle was more symmetrical to the cut pattern. It isn't. It's asymmetrical, so therefore 5% with 3 sell stops. Got to have some risk, though, for the potential reward. But overall, it's slightly risky trade because it's not like it's breaking out of this base right here and then maybe to go on that kind of uptrend. You know, it's a little bit shorter overall, and once again, not exactly proper.